In this video, I'm going to teach you how to trade gold. There was a good question on doing a deep dive on how to analyze gold and how to predict the gold price. And I think I'm going to tell you what I learned over the years. So there's a lot to talk about. It's not easy to predict gold prices, but I think I got the hang of it. So first of all, just go to my channel and there is a playlist macroeconomics. Just watch all the videos, and this is the macro, and the micro is the other playlist, which is Mining Investor 101. Watch all of these videos and you will already know much more, because knowledge is power. So which of these videos do I like the most? Well, let's see. Boom bust cycle. This is a must watch. If you don't understand the boom bust cycle, then you will never know what gold will do in the long term. So this is a must watch video. Boom bust cycle. OPEC cuts or bullish golds, also interesting. Yeah, what's good as well? Discount rate, also important to know, but that's more for picking stocks. Discount rate is a pretty interesting video to watch. Yeah, these are all micro. This one is also interesting, how to calculate the Shanghai gold premium, because that will give you short-term data. Then we have the Mining Investor 101. Which ones do I recommend? Maybe this one. What is the gold price target? Yeah, these are typically very micro on how to analyze companies. So this is not usable for predicting the gold price, but more to pick stocks and miners. Yeah, so I don't think these are too good to look at to predict the gold price. Yeah, yeah, these are all micro videos. So most important is the macroeconomics. Just start with this one and watch the ones that I recommended. So that's first. The second one is you need to do data mining. The more data that you have about gold, the more you know about the price direction. So data mining, I already helped you with this gold checklist. A lot of data is given on this page. So use this page and then you can forecast gold. Gold forecast index is of course the most important, because this is a leading index and you can easily see that this is a predictor of the gold price. Okay, so just watch where the red line is and then you will know where gold will go to. So there are long-term and short-term indicators. The most important one was the boom bust cycle. Okay, the boom bust cycle, if you have watched that video, then you know that the economy will contract and expand. When the economy contracts, then money moves into gold, because gold is on top of the hierarchy of money. Okay, if you have a that's a credit bust, then gold will go up, and if you have a credit boom, then stocks will go up instead of gold. So it's always between gold and credit. Credit is stocks and bonds. So you need to know where you are in the cycle, and the most important chart, according to me, is of course the near-term forward spread and the yield curve. That's the first thing that you look at, this here. That's the first thing to look at from a long-term perspective. Near-term forward spread. So this should be bookmarked, the most important chart to predict gold. So, and this is long-term, of course. So if you have a period where we have an inverted yield curve, so these points here, negative, that means that the short-term maturity bonds have a higher interest than the long-term maturity bonds. I can show you that quickly here. So this is a yield curve. Normally, a yield curve is like this. Low yields for the short-term bonds, and then high yield for the long-term bonds. And this is a normal yield curve with a lot of elasticity, where money will move from here, from gold, to stocks and bonds, which have a higher yield. This is normal. Today we are abnormal. So this curve is now inverted, like this. And with an inverted yield curve, money moves from stocks and bonds to gold, to real money. And this is what this actually says. Because if you have an inverted yield curve, then eventually everyone will get into the money market with short-term maturities, and that will push yields downwards, while long-term yields will be pushed upwards. They always want to go to equilibrium, so you get money from here going into gold, and that is a bust cycle. Bust cycle where money moves into gold. So that corresponds with these negative points here. And these are the best periods to buy gold. So that's the first thing to look at. If you are in an inverted yield curve period, then money will automatically move into gold. Okay, that's called scarcity and is bullish for gold. So yeah, so first thing is look at the near-term forward spread. This actually means that that is negative. That means that the short-term yield will go down to get to equilibrium. A bit complex to understand, but you will need to learn it. If you don't want to learn it, then just look at this chart and pick the periods where we are negative, and then you know that gold will go up eventually. That's the long term. Okay, that's the first thing. You need to know in which cycle we are. We are now in a cycle where we are going into a recession because the yield curve is inverted, because we are in scarcity, because money is going from stocks and bonds into gold and cash. So that's the first thing to look at. Then we can go in deeper. Take all of these data points, unemployment rate, inflation, etc. And then you can actually get into more detail. So we know that gold will go up because we are in a period of scarcity, but we don't know yet how fast gold will go up. Is it going to go up like next year to 3,000, or is it slowly going to go up? So we need more data, and we just use all of these data points here to increase the accuracy of prediction. And all of these parameters will have an effect on the gold price. Okay, central bank buying can affect it. GLD ETF buying can affect it. Everything can affect it. LBMA, this is a pretty big part of demand. If this rises again, then gold will go up. You can look at the Chinese and India data because this is probably one of the biggest demands for gold. So this data needs to be looked at every month. That's important. And you know where to look for that. Go to these links. What else? We also know that we are in a period where gold as a percentage is very low. So we are in a secular low for gold, and gold will probably go higher. So these are things that you need to know, keep in mind. Central bank holdings need to be looked at. So this is the medium term. The long term was the cycles on the yield curve. These are medium term indicators that I'm looking at right now. Okay, medium term. The central bank things, the China, you can look at that month over month. Mint sales, also medium term indicators. Okay, so now we go to the short term indicators, and those are the premiums on gold and silver. And here you have the West, premiums in the West, which are pretty low right now. And you have the premiums in the East, which are pretty high at 1%. So these indicators are short term, and you need to look at it every day for the short term movements. So for example, today I saw 1% premiums on China, on Chinese gold. So I still know that gold will go up, not down. So we are green. You know how to look at it. You can find it via this link. I also made videos on that. So if you look at all my videos, you will know how to calculate this. And gold premiums as well. COT reports, also short-term indicator. You can look at this every week, and this will tell you if we are topping out or we are bottoming out by just looking at this red chart and looking at the average. You know that we are currently overvalued. So that could be slams, and we do have slams in silver, for example. Open interest, also short-term indicators. Waiting for the open interest to go back down, and then we will bottom out. So yeah, and seasonality, that's also a way to check where we stand in gold. This bullish percent index sentiment is more of a mid-term indicator, and this one is a long-term indicator, the currency in circulation. So in the long term, we're still going to move higher. So to predict gold, yeah, how can I put this? It's basically looking at all of the data that you have here, then putting it in your brain and just calculate a conclusion out of that. Also, rate cuts, etc., are an indicator. Try to forecast what the rate cuts or rate hikes are going to be, and you will know what gold will do. For the rate hikes, there's also a website where you can check that. There's a probability website for rate cuts and rate hikes. Actually, I can show you that quickly. Where is the this is the Fed funds rate. So all of these links, just use them. They are very useful. So here, the probability of a rate hike can be monitored here. So just click on the link and you will go to this page where there is the probability of a rate cut. So as you can see here, current rate is 525,550 and it will stay at 525,550, which means the probability of a rate cut is 0. We will just keep our rates at the same level. So many links here that you can use. But I can't help you more than this. You just need to have experience in using this data. What I wouldn't do at all is doing technical analysis, because that's useless, absolutely useless to do technical analysis. Fundamental analysis is much more important, because I mean, everyone can just say, oh, this is too high and it will correct a bit and then go much higher. No, don't look at technical analysis. Look at data mining. Use this page to look at the data current data, put it in your head, in your brain, mix it, and you get an output. You get an output from your brain, which will tell you if gold is going to go up or down. And that's the only way to forecast gold, not technical analysis. It's all about knowledge and data mining and being on top of it using current data. For example, if China suddenly stops buying gold, like last week, then this has a significant impact on gold. So these are all fundamental indicators, and you can't do anything with technical indicators on that, right? So you need to understand that fundamentals matter. And there are long-term fundamentals and short-term fundamentals. So just a rant on how to predict gold. And I hope you will watch all these videos and increase your knowledge first and foremost. And then you can look at this page and become a gold forecaster yourself. Okay? And once you know that gold will go higher, you can start buying gold miners and doing more micro instead of macro. And that's where the fun starts, because you will get leverage on those things. And if you are right about the movement of gold and you are right about the company, then you can make a lot of money. Okay, so that was the video and I'll see you in the next one. Bye.